Ladies and gentlemen, good day and welcome to Q3 FY23 earnings conference call of Kriti Industries India Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorum Advisors. Thank you, and over to you, Ms. Jain.
Good morning, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorum Advisors. We represent the Investor Relations of the Industries India Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the third quarter of financial year 2023. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on the management's belief as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Shiv Singh Mehta, Chairman and Managing Director, and Mr. Rajesh Sisodia, Chief Financial Officer. Without any further delay, I request Mr. Shiv Singh Mehta to start with his opening remarks. Thank you, and over to you, sir.
Good morning, everyone, and welcome to the earnings call of Kriti Industries India Limited for the third quarter and 9 months ended of the financial year 2023. I am happy to inform you that this quarter has seen revival in the financial performance driven by strong growth. This quarter has been significant, particularly 2 earlier quarters. Post fire at our works, company had suffered due to erosion of value of stocks. Falling prices trend continued till end November, but by then we had liquidated most of our old stocks. In this quarter, we saw surge in demand and also faced challenges in meeting this surge. The company registered a volume growth of 192% year-on-year and 115% in terms of value. We had to give preference to agri to meet the demand in the agriculture segment and achieve 200% of year-on-year sales growth. The continued decline in PVC resin prices from 141 per kg in April to 77 per kg in November has negatively impacted the polymer industry's profit in the first half year 2023. However, beginning December, the prices have increased and stabilized at around rupees 90 per kg. Because of correction in PVC prices, products have become more affordable and demand from agriculture segment has increased significantly. Unfortunately, though due to higher price raw material inventories, the margins have declined. We believe that once there is a stability in the raw material prices, the margins will also stabilize and normalize at earlier levels. For 9 months ended, the company registered a growth of 64% year-on-year and 41% in terms of value on a year-on-year basis. Our company's focus will continue to develop both agri and building products we also continue to expand our markets geographically in states where the company has already made successful entries and has also extended gains. The company has undertaken capex of rupees 30 crores and has completed building full range of SKUs related to building products and column pipe segments. It has plans to focus aggressively in this segment due to their non-cyclical nature and higher value addition. Now I hand over this call to our newly appointed CFO, Mr. Rajesh Sisodia, to give you financial highlights.
Thank you, sir. Good morning, dear stakeholders. Let me take you through the financial performance of our company on a consolidated basis. The revenue for the third quarter of financial year 2023 was INR 256 crores, which was 115% higher on a YOY basis and 145% higher on QOQ basis. Our EBITDA stood at about rupees 10 crores and net profit was reported at 4.6 crores. The revenue for 9 months ended of financial year 2023 was INR 544 crores, which grew 41% on YOY basis. EBITDA loss reduced to INR 23 crores and net loss was around 39 crores. Talking about the segment-wise revenue for this quarter, agriculture, industrial solutions and building contributed 75%, 15% and 9% growth respectively. Sales volume from the agricultural segment grew by 200%, while industrial solutions grew by 140% and building products grew by 13% YOY basis. I thank you for this opportunity and now we would like to open up the floor for questions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello.
Go ahead, sir. You're audible.
Yeah, sure. Sir, congratulations for a great set of numbers. So firstly, with the kind of volumes we have done in the quarter 3, how do we look at the next 2 quarters? Is the momentum sustained in terms of the different segments, agri, industrial? Each segment-wise, can you share some insights about the overall demand scenario and whether what kind of volumes do we see, considering that the next quarter, that is April, May, June, is our best quarter? That is my question number 1.
Should I respond to your first question before you go for the next?
Yeah. Yes, sir. Yeah.
You see, at current prices of raw material, which look to be now stable, there is a definite comfort on the part of a customer to buy product. And also there is a pent-up demand because of high raw material prices in last year and a half. There were many people who had deferred their procurement. So we continue to believe that coming quarters will show robust growth in volumes. Regarding agriculture, on building product, we are on a smaller base, so there is every good opportunity to grow. So this should also show significant volume growth. As I have been maintaining, for institutional sales, we are conservative and we continue to maintain that unless and until we have secured payment line, we will not be selling or exposing ourselves beyond a limit to industrial solutions. So you will see more or less stability in industrial solution, but you will see growth in agri and BP segments.
Sure. Sir, in your previous remarks, previous interaction also, and today opening also, you mentioned that since the agri demand was quite robust and we have been in this segment for a long time, so somewhere you had sacrificed the building products volumes for the agri part.
Right.
So two parts to that. One, how do we see the scenario going ahead now? Is it like the building products now, the demand is good and probably the capacities are sufficient now, and there is some advanced planning so that you may deliver to the good, robust agri demand, as well as the building products volumes also can see a sharp jump?
You see what had happened, that due to fire, we had limitations of supply for almost 7 months before this peak season had again come in. So we had to give preference to our existing long-term relationship of dealers. So we had to sacrifice to some extent building material supplies during this period. Seeing the robust growth, we are further adding capacities towards our extrusion side, which can offer comfort both to agri and BP segment. So we would see that we are more or less ready and well prepared both side of raw material as well as processing to increase demand. Now, if demand exceeds our preparations, still we may have some challenges, but we are preparing ourselves as best as we can to cope up with the challenges.
Sure. So this has been our best quarter in terms of revenue, and in last almost right from June 18 till date, this has been the highest sales for us in a quarter. And in terms of volumes, with whatever data I have, this is the second best volumes right from June 19 till date. So going ahead, and typically more so for the April-May June quarter, do we feel we can be higher than this volume as well as revenue? And just one more thing.
We expect growth on these numbers as there is a continuous demand and market is seeing these prices more comfortable, and we are seeing there is a continuous improvement in terms of total numbers.
Sure. And last one thing, sir, now. With regards to the inventory, so I believe you must be having some inventory losses, else probably our margins would have been much higher. So typically now going ahead, so two parts. One is, what was the inventory kind of, if there was no inventory loss, what could have been our margins in this quarter? And going ahead, can we see a sharp improvement in our operating margins?
You see, till end of November, that is 30th November, prices were continuously coming down. From a 88 level on October 1st, they had come down to 72 on November 30th. And by this time, we had exhausted our all old inventory. So whatever trading losses were there were booked into books by end of November. It's only in December that we had material which is as per the current raw material prices. And there was again increase in the month of December from 70 to almost 88, 89, 90 rupees. So this is why you would see that we could recover whatever trading losses we had in the quarter 3, and we were able to show profits at the end of quarter because of robust volume and erosion of all old inventories.
So the margins going ahead, if you could share some insights from where we are today. We had about 4% operating margins in December quarter.
That's right. As I said in my statement as well, that margins should get back to, in agri segment, as per our normal regular margins, and in BP segments also we will see better margins. So overall, we certainly see that quarter on quarter we should be seeing EBITDA margins over 10% averaging. Let's see how the market moves in terms of raw material, but we are hopeful to have much better margins going forward.
Sure. Thank you so much, sir. Wish you all the best.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Tushar from Kamakhya Wealth Management. Please go ahead.
Yeah, good morning, sir, and congratulations for your good set of numbers. So my question is on the inventory. So in terms of the high cost inventory, what will be the percentage of the total inventory, the high cost one?
Now it's all exhausted. Now we have all inventories which are current and presently processed.
Fair enough, sir. Now, sir, considering the current capacity, how much revenue can we get from the current capacity, and what is the current utilization level?
You see, we have been, capacity with different sizes, we are operating at full capacity, whatever we could in month of November, December. But going forward, April, we will have been adding some extra capacity in our processing side. So we would be quite hopeful that we will be able to utilize the entire capacity April onwards, whichever is the increased capacity we have.
Fair enough, sir. So CPVC and fittings, what percentage of our total sales?
Can you repeat it?
So CPVC pipes and the pipe fittings would comprise how much percentage of our total sales on an average?
About 10%.
Yeah, around 7%.
So about 8% it is at the moment, but it will go up because in last, as I said, in last quarter, this is Q3, we had limitations in agriculture processing area. So we had to give it priority over BP because our dealers were suffering for almost 7-8 months, and this was peak season.
Okay. Sir, I could see that we have now almost all the SKUs for the building product. So
Right.
Can we expect the building products to go near to 20% range of the total revenue in your future?
This is a process because there will be robust growth in agriculture as well. So percentage-wise, the percentages may improve, but significant, the volumes will improve, but percentages-wise, what kind of a ratio we achieve, this will be improved from whatever current percentages are. But significant percentages growth will be difficult to define at this moment.
Yes, sir. So my last question. So considering the prices and the stocking which happened, so what kind of growth you are seeing in the Q1 for the next financial year?
Q1 will be a significant growth because last year, because of fire, beginning from 28th of April, we had limitations of processing and sales.
Okay. Fair enough, sir. Thank you.
Yeah.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Dwanil Desai from Total Capital. Please go ahead.
Hi, good morning, sir. First of all, congratulations on a very strong numbers after some challenging time. So the first question is, we did around 17,600 metric tons on agri side this quarter, and you said that you may be able to continue along. But Q3 and Q1 has been our strongest quarter, right? So Q4 compared to last year or FY19 numbers, do we see 25-30% growth on that? Is that what current market expectation based on what your assessment of demand is?
You see, this quarter agri was 34,000. This was how much?
17,000. 17,600.
This is 9 months. 9 months. For the quarter was?
Quarter was 17,675.
Okay. So Q3 was about 17,675, which is a growth of significant growth of last year. We hope to maintain at least upward 10% growth even in Q4 in terms of volumes, 8 to 10%.
Okay.
And going forward in Q1 of next financial year, it will all, since as I was saying, last year was a challenging time for us, so we see again a good growth.
Okay. My understanding is that Q3 is a very large quarter and Q4 generally the demand starts picking up end of Feb, March for the stocking for Q1. So,
that's right.
Yeah. So
I'm saying Q4 we may see a growth over last year.
Okay. No, but you are saying that we may be able to do at least as much volume as Q3 in Q4. That is what you are saying?
No, not Q3 and Q4. I said over last year, we will be able to show you a growth of 10% as compared to what we did last year Q4 to this year Q4.
Okay. So, sir, aren't our aspiration higher to grow at maybe 20% plus, on pure YOY basis?
That is what will be our effort. But what I can commit here is what I clearly see doable. And we will definitely strive to do much better than what we think is what we are talking at the moment.
Okay, got it. And any softness in demand you are seeing currently because of the channel inventory being restocked last quarter? Is there any impact that you are seeing in terms of demand on the ground?
I am seeing there is a robust demand from customer, that is a farmer. So the material is getting even consumed from channel partners, stocks, and they are again buying on a regular basis.
Okay, got it. Sir, on building product side, in spite of we were kind of short of capacity, we still did very decent in terms of volume. We did close to 1100 tons, 1125 tons this quarter, which is growth over even last quarter. So without constraint, do you think that we should be able to do 1500 tons kind of a number, going forward?
I certainly look forward to these numbers because the constraints removed and building product fortunately has a sustained demand across the year. It does not have cyclic nature as agriculture demand has.
Right. So our I think we were kind of targeting 100 crore numbers which we may slightly fall short of this year. But how do you look at this building product numbers next year? Do you have any budget in mind that this is the number you want to achieve?
We are working on our AOP exercise at the moment. So our numbers will be certainly we will look forward to better numbers. This year we are constrained and we are likely to be short of 100 crores. But next year we will show a growth over number what you are talking about.
Okay. And sir, you indicated that you are adding more extrusion capacity. So I was assuming that our capacity would be good enough to serve at least couple of years. So if you can, elaborate on how much capacity we are adding, what kind of capex, then are we also adding capacity on the building product?
The building product is a continuous process of adding new range and new SKUs for fittings. But we will not rush into major fitting expansion, but we will certainly see the volume as they grow, we will have to add capacities, which will be marginal investments over a period of next couple of months. But on extrusion side, as we clearly see, we will fall short. So we are increasing our capacity by almost close to 30 tons per day, which is about 800 tons a month.
Okay, so close to 10,000 tons addition on a yearly basis.
It is a cyclic nature. So you cannot consume the entire capacity throughout 12-month cycle.
Right.
So there will be some months where you will not be able to utilize the entire capacity, but in some months you will definitely use them.
Okay, got it. And the last question, if you can, give us some sense that this very good volume performance, is it contributed only, I mean, the large part of that is coming from MP, Rajasthan and Maharashtra, or even new states have started scaling up? Some sense on that.
You see, but when we were short of material, suddenly our peaks, MP, Rajasthan, Maharashtra got preference, particularly when our dealers had suffered for a reasonable 6-7 long months. So we did prioritize our sales in these areas where our existing strong brand and dealership had to be given preference over others. But we did grow in other states as well, but there was a marginal growth when there was a shortage. Major growth came from these states.
Okay, got it. I have more questions, but I don't.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Ankur Kumar from Alpha Capital Group. Please go ahead.
Hello, sir. Thank you for taking my questions. Sir, all questions on the company have been answered. I just wanted to know about the industry. I think PVC prices fell a lot in the last 6-8 weeks. Please comment why, and now since it has started going up also, can you please comment why is that happening and our view on the prices for next 6 months, sir?
You see, if you look at, what I get to know when I talk to my suppliers who are overseas and worldwide, if you see, even today, Europe is not picking up in terms of economic side of the, it is under recession. US has improved, but property in US has still not improved because of high interest. And China is still struggling with the coronavirus, so the local situation is not very clear. So major requirements for particularly PVC is coming from Asian countries and markets. So that is where we see a overall demand supply situation where it is quite comfortable overall. That's why we don't see much upside. But India demand being very robust, I think that prices will remain within this range of current prices, because anything around this level is comfortable to seller as well as buyer, and market should look towards better healthy growth because these are acceptable prices to Indian consumers as well. So I see a stability rather than any kind of a major change in prices.
Sure, sir. And last question would be, you have talked about normalized margins of 8 to 10% odd. So can we expect those margins to start coming in from the Q4 also?
Because our inventories have eroded, so we are quite hopeful that the margins from this quarter should improve.
Sure, sir. Thank you and all the best.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Ankit Gupta from Bamboo Capital Partners. Please go ahead.
Yeah, thanks for the opportunity and congratulations for a very good performance given the tough times we have faced in the past 1.5 years. Sir, coming back to the question on the demand, the sustenance of demand specifically. So if you can talk about, how does Q1 of next year look like for us? Because last year, if you look at it, like Q1 was pretty subdued. We did, volumes to the tune of around 11,500 metric ton. So how does Q1 of next year look like as of now?
As I explained, I am quite hopeful for a robust Q1. Particularly last year we had a challenge. Post our fire on 28th of April, we were constrained both on production and supply side. So, and as such, we are seeing the prices at current level gives a good reason for customers, a comfortable price level for customers, so we can see a good demand growth. So in addition to what we suffered, we have an ability to supply and demand looks to be robust.
Sure. So does it look like, we'll be able to achieve our best ever volumes, which we have done in, I think, Q1 FY19, we had achieved quite robust volume. So will we be able to cross? Yeah.
Do better than what we had done ever before.
Sure. at least across the Q3 volumes that we have.
That's right. Yes, sure.
And sir, coming back to the question of margins, given how agri is performing and BP now has taken a bit of backseat, primarily because of constraint on capacity side. So do you think with higher proportion of agri, our aspirational margins of 11-12% that we were aspiring on the EBITDA side will be around 10% itself because of agri, given agri is a relatively lower margin product compared to BP?
Yes, you are absolutely, your guidance is right, because agri will not offer the margins which BP offers, and agri is also growing. So overall, our volumes should show a fairly good growth, and healthy, overall EBITDA margins will creep towards the numbers we have achieved earlier, that's 10 to 11% and plus.
Sure. And so last question on the capacity addition side. We are only a single location company in terms of our plant. And if we see rest of the players in the industry, even the ones which are near our size in terms of volume have diversified plant locations. And we also had plans to enter at least or to set up new plants at least in some of the locations in South India, given our increasing presence there. So, but now we are adding a smaller capacity at our existing location itself. So, how do you see ourselves opening up new plants across geographies, or you think for a year or two we'll be expanding capacities at our existing location only?
You see, as industry has seen that any organized player sooner or later have to diversify locations of manufacturing to meet the local demands, more logistically competitive situation, and in terms of turnaround times, in the sense that the delivery times are within control. So we will have to do that. Because of coronavirus time and last year's episode, we had to defer our such plans for the time being, but we are absolutely clear that is the need for growth and development.
Sure. So we might look to put up a plant at new location, maybe in a year or two time.
Do it as soon as we get over and see a good quarter or two, and that will be certainly looking at it.
Sure. Once again, congratulations and wish you all the best.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Deepak Poddar, yeah, go ahead.
Am I audible?
Yes, you are.
Okay. So, thank you very much, sir, for the opportunity. So, now you mentioned about the PVC prices stabilized to ₹90, right? But we don't expect much upside from these levels, right? Because globally, when you see demand subdued, though in India demand is quite robust, right?
If I've understood you right, that you are saying that the prices are likely to remain within a close range around current levels. That's our anticipation. Yes.
Mm-hmm. And okay, fair enough. And if I have to assume that the price level remain at this ₹90 per kg,
sorry to interrupt you. So sorry to interrupt you, but your voice is not coming clear.
Now it's better.
Are you on speakerphone?
Just hold on. Hello.
Yeah.
Yes.
It's better now.
It's better. Okay. So here, if I have to assume that the price stabilize at this ₹90 per kg, so at this PVC price range, 10 to 11% EBITDA margin that we are targeting, right? In general, that is achievable, right?
That looks achievable. Yes.
Okay. And you mentioned that this range we are looking to achieve from fourth quarter itself, right?
Yes. This is what I'm saying. Now, going forward, we should look at this kind of EBITDA margins.
Going forward. And this quarter, what was the inventory loss in rupees crore?
Last quarter, we must have
Yeah.
had, I don't have exact numbers here, but it should be around close to 15 CR as a inventory loss, 15, 16 CR. Hello? Hello? Hello?
The line for the participant dropped. We move on to the next participant. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello.
Yes.
Hello.
Go ahead, your order.
Sir, just one data point. So MP and Rajasthan, which were contributing around 88% in March 18, for March 22, as per the annual report, that was down to around 75%.
Right.
I'm talking about MP and Rajasthan percentage of sales. So if you can share the data with regards to the current year, 9 months, the current quarter also, whatever is possible.
You see, as I had explained earlier, we gave preference to MP, Rajasthan and Maharashtra this time in this quarter because of shortage, and our existing dealers were suffering for some time. So the total percentage for these states remained robust, and we could not supply to other states as much in the shortage time. But still, I'll try to get you the numbers.
So I do understand what you're saying, and I fully appreciate that.
I'll get you the numbers.
I was just looking for the data point. MP and Rajasthan in current year have contributed what percentage of sales?
MP was total. MP had come down to 60 or how much? 60?
62%.
60.
Up to 60%. Yeah.
60%.
Yeah. 15% is
Rajasthan, and Maharashtra is about 13%. Am I clear?
Sure. Yes. Sure. Thank you, sir. Thank you.
Thanks.
Thank you. The next question is from the line of Vanil Desai from Total Capital. Please go ahead.
So just one question on dealer addition. So I think last call you guided that we had stopped, we restarted the dealer addition because we had stopped in between due to challenging time. So can you give us the total number of dealer addition that we have done so far, and what is the plan going forward? And if you can also give some color on whether dealer addition would be only on PP side, or will it be all products, and then which geographies we are adding dealers?
You see, as I had told you earlier, I will still say that this is the time of consolidation of new dealers because they have to be matured in the way we work. So instead of rampant increase in number of dealers, we are focusing on ensuring our dealers understand the Kriti way of working and work as per a team work. So there will be few dealers which will be, doing very well, and some dealers will be not coming up to our requirements. So we will be in this process, rather than increasing in numbers, we will be working on consolidation and efficiency or effectiveness improvement. So going forward from next quarter, that is Q1, we may again go for expansion of dealerships.
Yes, and that's very good to hear. I think good approach. Thank you.
Thank you. Next question is from the line of Jatin from RDL Investments. Please go ahead.
Yeah, hi, good afternoon. Thanks for the opportunity. 2-3 questions. First is, when I look at your overall capacity on the agri side, I think it's about 100,000 tons, and this quarter we have done 17,000. If I annualize that, it's a 68,000. So is 70% kind of the max possible that you can do because you are doing different diameters on your capacity? Is that the right way to look at your capacity?
Absolutely. You are absolutely right.
Okay. That's fine. I had a couple of questions on your balance sheet. Sorry, I'm just kind of starting to look at the company. So one is, when I look at your accounts payable, I see that as a very large number. And when I look at the profile of, people whom you will be buying PVC from, like somebody like a Reliance Industries, I would be surprised as to why they would give you that big a credit period. Just wanted to understand why is that accounts payable number so high?
You see, we buy from them against LC.
Okay.
Letter of credit. So letter of credit is normally 60 days payment. The Reliance gets their payment by discounting the LCs immediately, and then we pay after that 60 days period.
Understood. And on your September 22 balance sheet, the capital work in progress was about 34 crores. So what is this new investment that you're doing?
We have expanded our capacity. We have added building material as a major initiative on part of organization where we were not present earlier. So we developed full range of products in building material as well as in column pipes. So the whole capex was allocated for that development.
Yeah, but I thought that was completed by September 22. And why is it still showing in CWIP?
So that got completed only towards middle of this current year.
Okay.
Because it takes a lot of time to get molds in place.
Understood. I was going through your annual report a few years back, and you had a lot of focus on trying to go into the industrial side of the business, on telecom pipes, on the gas side. But when I hear you today, you are kind of defocusing on the industrial segment and focusing a lot more on agri and PP. So what has brought about this change in kind of focus areas?
The reason is one, the Indian infrastructure companies, the EPC, depend a lot on government orders and government business. And we have invariably experienced that government payments, they link our payments to their receiving government payments, which puts us into a lot of difficult situations at times because they have not received payments, they are not releasing payments. So we are keeping ourselves limited exposure so that we don't get caught into a cycle where we are pushed into little financial stress because of non-receipt of payments from such EPC contractors.
Right. And as you look to build your building products business, traditionally I've seen, I think you have been kind of very focused on direct marketing rather than doing, TV advertising or out-of-home advertising to build a brand. But as you look to build your building products business, do you think you would need a different kind of approach there?
Initially, till we reach a critical mass and volume, we'll still continue to focus on BTL because we have a strong presence in rural market, agri markets, where also building materials find a good business potential. Because construction activities are across, whether it's urban, semi-urban or rural area. Right. So our strategy is very clear. We will first focus on areas of our strength. We will deliver to company a reasonable volume, and then only we look at ATL once we see there is a value doing it.
Okay, understood. Great. Thanks a lot for answering my questions patiently.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Namaskar, sir.
Namaskar.
Sir, what portion of our sale is towards
export here?
We are totally domestic oriented.
We are totally domestic at the moment.
Okay. And what is the impact of for them? There is no impact of foreign exchange fluctuation also, since our imports are also denominated although in dollars, but will be in rupee conversion only.
That's right. We import material which is always in dollars. So there we have, but as a policy, we hedge it immediately on contract.
Okay. And what portion of our sale, what is the order book size currently, and how do we go ahead with the order booking?
You see, for dealers, normally you get orders regularly and you keep supplying within 7 days cycle to the received orders because you don't have a bulk booking. Our dealers are at distribution point, they maintain certain stock and they keep selling and they replenish their inventory as per the sales. So the dealership is a widespread network where our dealers keep stocks and sell to a budding customer. So order book is a regular flow of business on everyday basis. You get it.
Sir, how have quarter 3 utilization levels been?
Quarter 3, we had a shortage in terms of capacities, and challenges were because of sudden surge in demand. Now we are seeing that we are stabilizing on raw material as well as processing. But the quarter 4, normally we don't have a challenge because in the cyclic business there are peaks which suddenly shoot up to a very high demand as compared to a normal average.
So you are speaking about the seasonality factor.
Seasonality factor, yes. In agriculture, we see a seasonality.
So sir, if we take Q3 base because of the factors which you have elaborated, if you give us some outline on how the utilization levels have been out of the total capacity of our the volume numbers, yeah.
What we foresee that during month of April, middle to June, you normally run short of your capacity.
Okay.
But you would have some available spare capacity in the Q4, that is from January to April. So this is how it's cyclic, because most of the demand suddenly comes from every segment of agriculture business. So agriculture business has peaks and two troughs, while building product is a sustained volume throughout the year.
Okay, sir. And sir, 2 points. Sir, first, I'll come to the building product, but firstly, sir, you mentioned that there is an impact of 15 crore on the bottom line on account of negative impact because of the inventory losses.
I mean, I don't have exact numbers, but that's my estimation, about 15 to 16 crores.
15 to 16 crores. The simple explanation is the PBT would have been higher by that amount had the inventory loss not been there.
Absolutely.
Okay. And we don't foresee that this playing out in the current quarter.
Yeah, because our now material, you see, we had surplus material which was lying with us because of fire, which was at a very high prices. So,
right, sir.
I mean, we had to erode those inventories over a period of time.
Yes. Sir, in the building product segment, if you could elaborate more, by building product, which item are you catering to and which sectors are you speaking about?
You see, when we talk of building material, there is a SWR, that is sewage, water and drainage area, rainwater area, which we have to cater to. When we talk of water, it is plumbing. Plumbing means the pipelines which supply water to the entire housing and residential area. Sewerage is for the, as you know, the sewer has to be passed on and cleared. And rainwater is something which you put water pipes where all rainwater is collected and taken away. So building material, these are types of pipes. In addition to that, we make water storage tanks which are put on top of buildings generally for storage of water.
Sir, these are those tanks compared to the syntax part of the story, the molding?
We have a limited range at the moment. We go up to 1,000 liters. We may expand our range over a period of time.
Sir, 2 points. Firstly, sir, okay, I'll come in the. Yes, sir, I will come in the.
Thank you so much. Participants, you may press star and 1 to ask a question. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
I'm audible, sir?
Yeah.
Okay. So, in general, just I wanted to understand on the revenue thing. I mean, what sort of revenue growth also we are looking at? I think in the previous calls we have been mentioning about 18 to 20%, right? I mean, so going into FY24, is that the range what we are looking at?
Will you repeat that? I'm not getting you clearly.
No, so
Deepak, once again, your voice is not coming clear.
Hello.
Yeah.
Yeah, so I was just trying to understand on the revenue growth part. I mean, in the previous calls as well, we have said that we are looking at 18 to 20% kind of a revenue growth, right? I mean, so in FY24 as well, is that the range we might be looking at?
Yeah, surely we are looking at that range.
And this 10 to 11% margin is what we have already guided, right?
What we anticipate, EBITDA margins will be.
Correct. And in general, on the demand scenario, I mean, if we speak the call of the peers as well, they are quite positive on the demand side. I mean, now with the PVC prices also kind of stabilized. Do you see that this demand scenario, which is seeing on uptick, you expect to extend it to FY24 as well?
If prices remain within the range as they are, we certainly see a growth for the entire financial year 23-24.
A good demand scenario, right?
Yeah.
Fair enough. Okay, yep, that's it from my side, sir. Thank you very much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Next follow-up is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yes, sir. Sir, when we look at your profile, it includes HDPE, LDPE, CPVC. You have the entire gamut to it, and as you mentioned, sir, about this SWR point, so therein, sir, a lot of this will be towards supplying to the EPC contractor. So in this building product segment, are we catering the end buyer is again the government agencies only catering to the Swachh Bharat Mission and Jal Jeevan scheme?
No, presently we are focusing on our dealership, and our dealership sells through retail distribution network, which is where consumer is an average house builder who builds his own personal property.
Okay, so the end user is, it is not going towards the government end.
Not at the moment. Our present focus is developing a robust dealership, because we enjoy good brand equity in the areas where we are strong, and we want first to develop a retail base, which we find is more robust and sustainable.
So, sir, companies which are addressing the rural market have expressed or have shown stress in the system. So, and your focus is on putting more toward the agri and the rural segment. So, where is this divergence? How are you explaining this divergence when players are saying that, yeah?
I'll re-communicate. What I said, agri demand is growing very well, where our focus is in agri. But when you asked me about building material, I said building material, our focus in distribution. So if suppose in state of Madhya Pradesh, Rajasthan and Maharashtra, we have a strong presence, we are trying to develop a retail network which will be able to cater to customers in all the segments and areas we are present.
Correct, sir. So the rural economy having stress has a lesser impact on your sales. That this would be a conclusion.
No, in all these states there are urban areas, semi-urban areas, and rural areas.
Yeah.
We will be present all across.
So yes, my point was that you are putting more thrust on the agri segment. The agri segment will be catering to the rural economy, and the rural economy is finding stress, as been seen in other companies which are focusing especially to the rural segment. So where is the
demand? I am again saying we are seeing a positive growth in revival of rural demand.
Right, sir. And sir, in the CPVC segment, sir, what portion of the sales is attributable towards the CPVC pipes? And
is growing, and as I said, building material has both CPVC segments, and both are growing well.
Correct, sir. And last point is on the industrial solution part, sir. If you could give us some, sir, we have seen in your presentation that both the industrial as well as the building material has shown substantial increase in definitely in volume as well as the revenue. So if you could give us some understanding on the industrial solution part also, which industries are you catering to and what are the fillers from them?
You see, in industrial solutions, our focus is on telecom, gas, and water. Now, in industrial solution, we have restrained ourselves from a major growth because normally we have seen that we have to ensure that whatever the payment cycles our EPC contractors or buyers are comfortable with, because we don't want to increase our exposure beyond a limit to this segment.
You are done with that? No, sir. I'm not able to understand what you are trying to
repeat.
Come again.
Because we don't want to extend credits. Normally what happens that EPC contracts are dependent government supplies and payments. When their government payments stuck, they are unable to pay to a supplier in time. And then the credits get little stressed. Because till the time government revenues or their EPC contractors receive their payment, they are not able to pay to suppliers. So we find it little risky in terms of long-term strategic growth in this area. That's why we want to retain a limited share, which we think we can be comfortable with.
So we will be in this vicinity of 12 to 13% only to this industrial segment.
Right. We will not unnecessarily grow this segment beyond a limit, unless we are sure that cash flows are positive and payments have no limitations.
But the capex cycle is going to skew towards these segments. The gas distribution and telecom companies spending a lot of money, so there would be a good flow of orders from the segment.
I agree. So then, when the order flow will improve and cash flow cycle is also better, and we will not enter into unnecessary, very low margin business areas in this segment. So we will keep all these things in perspective, and we will be cautious about our growth on building products.
Right. Thank you, sir, and thank you for all the elaborate answers. I have a couple of them. I will take it offline, sir.
Sure.
Thank you, sir. Okay. No, sir.
Thank you very much. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Sorry, sir, just to clarify, you mentioned the inventory loss in this current quarter is around 15 crores, 15.
That is my estimation. I don't have the exact number, but that 15 to 16 crores would be a trading loss for this quarter because prices fell from 88 to 72 by the time we had exhausted our stock.
Got it. So in that range, about maybe 13 to 16 crores, plus or minus.
That's right.
Right. Sure. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to Mr. Shiv Singh Mehta from Kriti Industries for closing comments.
I would like to thank you all for finding time and being with us. We look forward to your support, and we will assure you that we'll put in our best efforts to overcome whatever difficult period we have gone. Thank you very much, and all the best to all of you.
Thank you very much. On behalf of Kriti Industries India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.